And welcome to episode number 25 of Daily Market Mastery with me, Christian Rauchenwald. As always in Daily Market Mastery, we are using the Elliott Wave principle or Elliott Wave theory to try to predict the movements of stocks and indices in the future, and basically managing my eToro popular investor portfolio publicly this way. So giving you some insights into how and why I'm making certain decisions. If you are new to Elliott Wave Theory, as always, you can use the link in the description down below to either read the Elliott Wave Principle book online for free or get a physical copy, and also to get a one-page cheat sheet that has all the wave patterns and their rules and guidelines on one simple page. Plus, on top of that, you can also find pretty much all the tools that I'm using, so the charting software and everything that I'm using in the description down below. And last but not least, also in the description and in the pinned chat message, you can find a link to my portfolio that allows you to, if we jump to the screen, check out my personal track record. Let's hide that there. So you see how I've been doing over the years since I started this public portfolio on eToro. Now, as always, however, disclaimer at the bottom of the screen visible. Everything that I share in this live stream / video, depending if you're watching it now, if you're watching it as a recording later, is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. So I'm just sharing why I'm doing what I'm doing. Doesn't mean that it's the right decision for you as well. And last but not least, if you don't want to deal with learning how to apply Elliott Wave Theory, how to manage your portfolio and so on, you can obviously always use the link in the description or in the pinned chat message, not just to copy my portfolio if that's what's fitting your investment horizon and risk appetite, but also to copy one of hundreds, if not thousands, other popular investors on eToro. And yeah, that's pretty much it. With that, we can jump straight at it as usual. We had our summary episode yesterday instead of Monday because there were some technical issues in the Monday stream. And yeah, today we're going to pick another stock to look at based on the upcoming earnings. So we already looked at most of what's visible here, if not all. So we looked at AMD, we looked at Ford. We did not look at Solar Edge, I think. But anyway, that's already in the past. So we need future earnings dates. We looked at Peloton, we looked at Shopify, we looked at Square Inc. or Block Inc. We looked at Apple, we looked at BKI, Black Knight Inc. We looked at Disney, we looked at, I don't think we looked at PayPal, maybe we looked at PayPal. So we looked at a lot of those. We looked at Domo, blah, 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 but we're going to jump ahead to June and see what's there. We have a separate GameStop episode, which would be, GameStop episode would be number 9. If you are curious about that, you can check it out. We covered NEO in episode number 21. And that brings us to MU, which we covered in episode number 22, which means not today, we actually already can jump into July. And there we have JPM, which we also covered in episode 23. And the next thing would be Morgan Stanley, so MS. So that's what we're going to look at next. Just going to fire up Motive Wave. And while we're waiting for Motive Wave, we can already open up the chart here in TradingView. Again, all those things are linked down in the description of the stream. So MS, open that up, and monthly chart and zoom out. So we have a long-term history. Yeah, I can already see an interesting pattern here. So looks like MS might be a decent opportunity depending on how, how that pattern here will look. Why do we look at TradingView and then also at why do we look at TradingView and then actually use Motive Wave? The reason for that is that the monthly chart, not always do we have the full or accurate data in Motive Wave. You can see here that we do not have accurate data to work with, because apparently there was a split at some point for sure, and the data that we get from Interactive Broker, which is my data source here into Motive Wave, does not consider it split. So for me, that chart looks like this, when it should look like this. Yeah, so, and it's important because if we, it doesn't make a huge difference in this case, but it makes an important distinction, because if we were to label based on this data, we would pick the low point here and say, okay, that's where we start. So we are either finished at wave 1 or we are somewhere in that wave 1. Yeah. And then based on that, if we finish that wave 1, we would expect a drop, wave 2, 3, 4, 5, and so on. And yeah, so, but if we already finished it, as I said, we would expect wave 2. If we didn't finish it, we would expect to go further and then have wave 2, yeah. However, if we consider the real data, then the tools in TradingView are not as powerful, but we can see clearly that the starting point here is the lowest point. So we can definitely say that it's either like this, on the biggest wave of the biggest degree. So for those of you who are not familiar at all, so I have to put 4, 5 somewhere here. For those of you who are not familiar with Elliott Wave Theory at all, yeah, you should know that, yeah, like they're waves of different degrees. So if I have this here, 1, 2, 3, and 3 might be finished now, or cannot be finished actually. So 3, 4, 5 or so. Then that wave 1 here will subdivide, or has to subdivide into another impulse wave, or a leading diagonal. That wave 2 has to subdivide into a corrective pattern. That wave 3, if it's a wave 3, would have to subdivide into an impulse wave. Wave 4, corrective pattern. Wave 5, impulse or leading diagonal. And then if we have an impulse here, so let's draw that out real quick as an example. Again, I'm not double checking what I enter here right now. I'm just providing an example. So the points that I'm picking might not always turn out to be 100% accurate. But so we see that basically, if that would be the impulse that makes up this wave 1, then this wave 1 also, if we look on a lower time frame, needs to subdivide in an impulse or a leading diagonal, corrective pattern, impulse, corrective pattern, impulse, or ending diagonal. Yeah? So that's the important part here. Now, we don't have to worry too much about confirming this here. So I'm fairly certain that it checks out, so that this here is 1, 2, 3, 4, 5, or it could also be 3, 4 could go till here as a flat corrective pattern. Still for 5 would be here. And yeah, then corrective pattern. So wave 2 is going to be the interesting question here, because it could obviously be, it could be an A, B, C corrective pattern, where wave C, however, is a little bit extreme. Yeah, it could be a combination corrective pattern where I don't know what the right word is, but so you have this wave point here, which would be at the low. And then there is, I forgot the word, but there is a way to say, okay, that wave 2 could actually be here, which would then be I have to look up the phrase that's used for it, yeah. But so where, even though that's the lowest point, the pattern could play out like this, with that being the official, yeah, official is the wrong word. Yeah, I will not find the word in the book right now, so I will look it up during the next couple of days, so that in the future I can use the proper labeling, phrase, whatever, to determine that. So, but theoretically, wave 2 could, for example, go till here. And it makes a difference because it means either we look from here, and here, by the way, we have to check the low that we have here is 671, and that's also the low that we have here. So at least here forward, we can label it in motive wave, which is important. But so we would know, and that would be the important part here. We'll see how that checks out if we label that, yeah. But the important part would be, instead of just starting from here without knowing this here, so instead of starting from here, we actually know that although in our data source it's wrong because the split was not adjusted for, that we actually have this to start with. Yeah, again, it will complain here about the wave point 2, because the wave point 0 actually, where do we have it? It would be at, wave point 0 would be at 651. Is that 651? Let's check. 651, yeah, so wave point 0 would be at 651 roughly. Okay, that's 652, that's probably as good as it gets. Yeah, so that would be our wave point 0, and then we have our wave point 2, and actually that would be in terms of time, do we have all the history? So here we are at February 93, and here we are at, that looks about right, yeah, so that looks about, yeah, February 93. So, well, so what did we say? 651, yeah, which we don't get here. So that's what we look at. Again, we're 1 cent off here. So that's the actual data if it would be properly adjusted. Now, the important part, so if we use Elliott Wave, not Elliott Wave Theory, but Kennedy channeling technique, which is a method in Elliott Wave Theory to easily label impulse waves. So we would take the starting point and the point 2 with a parallel through point 1 and extend that. And that would mean, okay, if this is 1, 2, then what we are waiting for right now is a breakout from here to indicate that we are right now definitely in this third wave movement. Yeah. And then the question would be, we can delete that. The question would be, okay, where are we here right now? So for example, this could be, if that's again indeed wave 2, then this could be wave 1, 2, or 2, let's say 2. And then the question would be, did we already have a wave 3? Probably not. So 3, 4, 5 would then just be thrown somewhere here. And obviously, eventually, that wave 5 should end up or meet up with this wave 3 here. Yeah, so that should obviously end or check out. Now, if we don't look at it as logarithmic, we actually might get a better result. Let's check here if we look like this. No, it doesn't get much better. It's better here for this part of the labeling. It's not better on the overall part. Or maybe it might still be better. So like, yeah, so which means here we actually, what's the high here? The high here is 109 and the high here was 93. Okay, so that's obviously, so which means our high here is also wrong because there the high here is only half of what it's supposed to be. Making it a little tricky, but yeah, so if we zoom in here, which means if that here would be 1, 2, then we would get another base channel of a smaller degree, which would look then like this. So 1, 2. And I can imagine that we're able to, if we look on a smaller time scale, to say 1, 2, 3, 4, 5 to fit an impulse here. And then we would have a corrective A, B, C that takes us down here. And then here again, if we take that whole thing further, then we have here 1, 2, and I'm going to just throw 3 somewhere right now. And yeah, it just, so, and then we would get an even smaller base channel here because we are now using this very, very small pattern here. So it's a pattern of a lower degree is the right nomenclature. I think that's the right word. And so if we put that on 2, and then that we would have our point 1 here, which means we would already have a breakout here. So which would indicate that this is already a third wave move. Now, what do we have here is a high point. The high is 39.15, and here the high is 37. So which would indicate that wave 3 actually ends here. Now, very often, but not always, the fourth wave will touch the top or the median of the base channel, which very nicely happens here. And then, although it complains here, so that's a little bit tricky because we actually get into the territory of wave 1, which means that cannot be an impulse, which brings us to two very important points. Yeah, if that cannot be an impulse, then it would need to be a leading diagonal or an ending diagonal. Now, if it's a leading diagonal, yeah, and that's the important part here. So if we say this here is now a leading diagonal, so that was 39.19, 39.15. So here, and then wave 5 would not go up there, but wave 5 might be, for example, here. Yeah, it would mean that, again, this cannot be the end of wave 3, but this would then be wave 1. I know it gets a lot of data on the chart right now, so there will be 1 degree between, because this here would then turn out to be wave 1. We would then have a correction that might go till here, and then that will actually end up, yeah, zooming the wrong way. So that 1, 2, so that's here 5, that's 1, 2, and then that 3, 4, 5 actually would end up, I mean, not like this, so not in that short time frame, yeah, don't get me wrong, but that would actually end up to complete this wave 3. Now, I know we have a lot of wave patterns now on the chart, but so basically from the biggest degree, we have, okay, from the IPO, 1, 2, and we're currently in wave 3, yeah? Then from that low point that marks our wave 2, we have then the next one, which is 1, 2, and we are currently in wave 3. Then from that third wave, we are able to label and say, okay, 1, 2, 3, 4, 5. And in order to confirm that, so using, again, Kennedy channeling technique, so you know when you have the point 3, you take the high point of point 3, you pick whatever next lower high point you have. That actually should be a lower high point, or I mislabeled. Wait, 39.19. Sorry, wave 3 would be here. And so then this one would be yeah, so you take the high point of wave 3, and then whichever high point you have after that, and you extend it. And once you have a confirmed breakout from here, it's very often, not always, but very often an indication that we're now in the 5th wave. Yeah, and that is important because if we're now in the 5th wave, we can now get another channel here, and I know that's a lot of channels on the chart, and take point 2 and point 4 with a parallel through point 3 and extend that. And we've got a profit target for our 5th wave, which either will reach the median or the top of that channel. Not always, but often. Yeah. And we see that it happens here, barely touching the top. Then here we have a correction again. And then here it happens again. Now the question would be, is wave 5 already finished here in terms of overall formation? So like how those things relate, short correction, yeah, longer correction. I would say yes. But it's also possible that this is not wave 3 yet, but wave 3 maybe finishes later. Because if we try to label this 1, 2, yeah, like 3, 4, 5 might check out. So let's decompose that just to make it more confusing. It would decompose like this. Nope, I'm not happy with that. And let's decompose. Yeah, that's decomposing that. However, if we say, okay, wave 3, would in that case, okay, then it would be an impulse. So, or then it would not work out as a diagonal, because if that's how it is, then we have our base channel, we have a breakout from the base channel, and then we have a retracement. Now I said very often actually Kennedy channeling technique, which is meant for impulse patterns and not for leading diagonals, yeah, so which might be the hang up that we have here, would suggest that we actually have a retracement here. Now, if that's the case and we decompose that one level, let's see what it comes up with. Yeah, garbage. So that's not as nice. Okay, let's remove the decomposing. But if we would have that, and I'm going to get rid of a few channels here right now just to make things easier, we can keep that one, we can keep that one, we already got rid of the trend line. If that were the case, then our profit target would obviously be different. So because then that would be 0.2, 0.4, parallel through 0.3, and we would already have exceeded our profit target. So I'm not sure that that's the case. So back we go, channels back, and that back. So if we say, okay, that's how it worked out, then it means we would have already getting rid of the base channel. That's the channel of a bigger degree. Then that would already be that. And yeah, so, which means we would right now be in a second wave here, and then if we get a Fibonacci retracement for all of that, which we put here to that high point, and we would expect a retracement to the 38.2 or 62.8, 61.8, plus on top of that, very often, but not always, we would expect to see the area of wave 4 of the previous degree, which would even be worse than that, yeah, which might indicate that we're actually more looking at this, because that would be perfectly aligned with the 61.8 retracement. So it might actually really be that this here is wave 4. And on another case, if we look at an impulse, very often but not always, wave there we can actually look in the book, so I'm not telling you something that's wrong. I'm going to switch to the desk cam real quick. If you have the book, you can then use the same page. If you don't have the book, I will tell you what's the chapter, so you can look it up online. What we're looking for is ratio analysis. Yeah, so if we would have extended waves, it's a little different, as we see here on page 136, which is again chapter 4, ratio analysis. But if we don't have extended waves, so here's a generalization that subsumes some of the observations we have already made. Unless wave 1 is extended, wave 4 often divides the price range of an impulse wave into the golden section. In such case, the later portion, blah, 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 blah. The guideline is somewhat loose in that the exact point within wave 4 that affects the subdivision varies. It can be its start, end, or extreme counter trend point. So basically what we see here is that, again, it's like a loose guideline. It's not something set in stone, but that wave 4 would in some cases be, if we look at the entire wave 38.2 retracement from the top. However, in what do we have here? Where does it say 38.2? Where's the 61.8? Okay, this guideline explains why the target for a retracement following a fifth wave often is doubly indicated both by the end of the preceding fourth wave and the 38.2 retracement point. Figure 4.7, okay? Okay, so that sentence, okay. Blah, blah, blah. Unless wave 1 is extended, wave 4 often divides the price range of an impulse wave into the golden section. In such cases, the latter portion is 38.2 of the total distance when wave 5 is not extended, as shown in figure 4.6, and 6.18 when it is, as shown in figure 4.7. So figure 4.7 would be, if the fifth wave is an extended wave, then we would look at this, that basically, and I'm not sure if that is an extended wave, but basically if we switch back, so basically if the fifth wave is extended and we look at the entire 0, 1, then the 61.8 would either mark the beginning and or extreme counter trend, or what was it, extreme counter trend point of wave 4. And right now here, if that would be wave 4, then it would perfectly align with the 61.8, yeah? And again, very often, wave 2 would then also take us to that point here. So, however, for that, I said we cannot label it like this, and which means that channel here is invalid. And that is just from the, so we would need an impulse here. And then if we label an impulse here, it would auto-label it actually like this, which seems more likely and looks better. Now here we don't, if we use Kennedy channeling technique to just see if that would, if we would get the results that we want, we probably don't see a breakout from that. Yeah, hardly, so no breakout, which is a little bit of a challenge here. And that's actually now labeled as a leading diagonal. Yeah, so still as a leading diagonal, not as an impulse, yeah, but still. So we don't see the breakout. We have a strong retracement here, which aligns there, but overall the pattern checks out. It doesn't violate any rules, which means right now, while we are in the, based on that labeling, while we're in the third wave of the degree super cycle, in the, what degree is that then? Cycle degree, we are also in a third wave. And then if we look lower, that would be lower. We're actually in a second wave in primary degree. And within that primary degree, we probably are, I don't know how that correction will play out, but it probably is just the beginning. Yeah, I mean, it will not play out like this, because if we want to go down here, we would need to have something like that, yeah, like that happen. So obviously then it would take longer in terms of duration, which means right now MS is not a buy for me. So Morgan Stanley is not a buy, but it's like set a price alert, and the price alert would be at, yeah, at 30. So 30 would be the point where I'm gonna look at it again. Yeah, now before we call it a day with that analysis of Morgan Stanley, we actually will quickly go here and look at MS, so Morgan Stanley, and look at what analysts say. They probably have a different opinion. So we can see that the low estimate is actually 80. So my estimate is way lower than what analysts predict. The average is actually 96, so which would be a decent upside, and the positive or bullish estimate would be even higher at 112. Yeah, only one out of, can we see all? So only one out of all analysts says, okay, I would sell it. And until 80, there are hold targets at 80, 85, 84, and so on, yeah. And the others are all bullish on Morgan Stanley. If we say all analysts, top analysts, okay, so 70% upside on average. Do I see it going there? Yes, but not immediately. So if that labeling turns out to be correct, hi Akashi, great that you made it. Hope you're having a great day. So if that labeling turns out to be correct, then Morgan Stanley will first have a correction. It might not go down that far. Actually, we'll adjust that. we'll need the alert not at 30, but we have to consider that it might only retrace 38.2% or in that area. So, and that would be at 46. So we're going to say at 48, we're going to have an alert. And then we're going to look at it again. So basically, if that turns out to be right, we would have the retracement for wave 2. And then I really need to make that smaller and then drag a little bit around so I can play that out. So we would have the retracement to wave 2, which may or may not go like this, go like that. We'll see. And then, I need to move a few things here. So that wave 3 is then obviously not finished yet. That wave 4 can then go here. Wave 5 can go here, which is then, wait, what? That's the wave 3 that we're working towards. Okay. And yeah, now I'm like just screwing up a little bit. So that's 1, 2, 3, 4, 5. And that 5 actually will finish that wave 3, which means this wave 3 here. Yeah, like so. Okay, it's going to be hard while things play out to already account for that. That's the biggest degree wave 3. So you go here. So that's the big one where we're waiting for. Ignore the price levels right now. I'm just trying to get a representation where that all looks a little bit better. So that aligns like this, that aligns like this, that aligns like this, and then that here would align like this. Yeah, so yeah, on the biggest degree, we say, okay, it's 1, 2, and we're currently in wave 3. So we're definitely expecting a breakout eventually off that base channel. So a new all-time high above 116, yeah. Then on 1 degree smaller, we are saying, okay, we are currently also in wave 3, where we expect and already had the breakout, obviously above 35, and would expect it to potentially, like go higher. So the 1,300 here are completely random, so don't get hung up on those, yeah. Then if we look into that, it looks like that third wave here is already finished, which would mean that we are right now looking at, where's that starting point? Oh yeah, would right now be looking at a corrective wave that may or may not take us down to 27 or at least 46. And then from there, we would then have a third wave, fourth wave, fifth wave that then, like completes that. So right now it's a holding position. However, if we were to go above the 116, it would indicate that we actually have the breakout on the big degree. Again, don't forget that this part here is not accurate in my data, that it actually starts from down here, 651 to be precise. So if we go above the 116, or here it's actually 130 or so, since over time that thing has an upwards angle, which is hard to spot, but it's there. And then we could assume, okay, we actually are within third wave territory, and what I made here, that the more detailed part is not accurate, and we could still enter a position and basically then look at what's the profit target for that third wave. If it turns out that I'm right, we will first see a correction that's a little bit bigger, and then get a proper market entry there. Yeah. So Akashi is saying it's raining cats and dogs here. Didn't have the time to catch you at episode 18 yet, but I will go there in some hours. Yeah. Don't worry or don't hurry. The whatever Disney analysis. I think it was Disney that we talked about at episode 18 in yesterday's summary, that I wasn't sure about why we have a Disney position. Yeah. Episode 18 Disney. So it will not run away, and we'll see how it plays out. Now I'm just gonna take our notes. So today is the 24th. Yep. Why do we have no? Oh, yesterday we had summary, so that's why there is no note, and which means today we actually should have episode 25. Yep, episode 25, and expected correction for Morgan Stanley to at least $46 and potentially around $27. Yeah. So yeah, we'll just have to wait and see how that plays out. And eventually, again, like either way, either we go up here and we get an entry, because then we are definitely in that third wave already. And just out of curiosity, if we throw another Fibonacci on the chart, in this case, an extension for which we would use that 0.1 here, then our profit target, long-term profit target, so not like next week or next month or so, would actually be 359. So even if we enter here somewhere in the 200 range, we would look at still almost 100% potential profit on our position. So even if that turns out wrong and we go here, That's okay. If it turns out that we are right, we get a better entry and still would have, like a couple hundred percent profit target. Yeah. Anyway, so hiding the message here. Yeah. Weather here today is mixed. Like, it was sunny the last 2 days, and today it's like, yeah, it was a little bit sunny. Now it's a little bit cloudy and with some wind. So we'll see how it goes. I think the forecast still says it should be nice. Yeah. Also was in the gym in the morning. So like right now I have my schedule that we have I'm gonna switch here. So that we have the Common Chaos live stream on my main YouTube channel at 7:30. Then around 8 after that stream, I on Monday, Wednesday, Friday go and hit the gym, and then come back, shower, and then we have the daily market mastery. And then I really like it so far because it really makes my morning so much more efficient. I get the streams out of the way, and in between the streams on the days where I don't have the gym, or even then, so then between this stream and the lunch, I have time to catch up with emails and stuff like that, and make sure that the afternoon is actually available for other stuff. So like ideally writing video scripts and working on our software product and so on. So it's like really, really nice to have it arranged like this right now. I hope that the morning times, I mean, for you, it's probably doesn't make a huge difference because you anyway are like 5 hours ahead. So it should already be 3 p.m. or 3:30 or something like at your place, if I'm not mistaken. But I hope that for others it's not an issue. But then again, I mean, the viewer numbers here on those streams are anyway close to zero. I should be a little bit more active in terms of sharing them on eToro. And we're also looking for some third party to help with like creating some short videos from the episodes that highlight, ideally only highlight obviously the times when I was right. So like when in episode 6 I said Shopify will do this and this, and then in episode 24 I'm taking the profit, or in episode 11 I said Peloton actually went wrong, so no short for that. Episode 12 said Domo will do like this. Episode 14 actually took the profit, and so on. And yeah, and I mean, the longer I do the streams, the more of those cases I will have where I'm right and make decent profit. And then some short content to share on YouTube might probably help to get some extra viewers that then tune in for the analysis. Anyway, we're already a half an hour mark into today's stream. Akashi, thanks for stopping by. If anyone lurked in between, also thank you for doing that. And yeah, like, see you then tomorrow with another episode of Daily Market Mastery, or in one of my other streams on my other YouTube channel.